What's going on, y'all? Charles Super in the Traders Corner. Today we have a bit of a longer video, as you'll see the first part of a course Daniel created that takes you through the entire process of building a trading bot and taking a lot. If you're interested in the course or the code to the bot itself and don't want to stick around for the video, check out the link in the description below. Hope you enjoy it. I hope it provides some value to you. Join us again next time. Thanks.
What's going on, guys, and welcome to the TTC Trading Bot course. We're really excited to get this course out to you guys because we know how beneficial it's been for us personally to learn and develop our own trading bots and allow them to trade for us. And we just wanted to pass that on to you guys. So without further ado, let's get right into it. So let's start off with what we're actually going to be learning in this course. This is going to be a simple strategy that we're going to be coding. It is going to be a simple EMA cross strategy, and we're also going to be utilizing the RSI, as you can see down here. But we're basically an EMA crossover. If you don't know what that is you have two EMAs. You have a shorter period EMA, which is this white line, and a longer period EMA, which is this red line. And when the shorter period EMA crosses below the longer period EMA, you are likely in a downtrend, and vice versa. When the shorter period EMA crosses above the longer period EMA, then you're most likely in an uptrend, right? Sometimes it flips back and forth really choppily, and the market's not really moving in one direction or the other. It's kind of just chopping around, but you still might be able to make some money in between here. But as you can see here, right, as the lower period EMA, this white line crosses below this red line, you're mostly in a downtrend from this point until here when it crosses over, right? We're mostly in a downtrend. So price starts up here, and then by the time that the EMA crosses back over, we are the market has moved significantly lower, right? So this is just our basic strategy that we're going to be coding today. And after we code this strategy, we're going to learn how to backtest it using the MetaTrader strategy tester, and then we're going to learn how to run this bot live in the market and how to run it 24/7, right? So without further ado, let's get into the next video. What's going on, guys? Welcome back to the TTC bot course, and in this video we're going to be going over the strategy a bit more in depth as to what we're going to be coding, right? So just to start off, we have the things that we're going to need for this strategy is going to be 2 exponential moving averages and the RSI. So if you don't know what an EMA is, or an exponential moving average, it is basically an average of the X amount of price data for the last candles, right? So it is an average of the last, let's say, 10 candles. So let's say this smaller EMA, which is a 10 period EMA, this 10 period EMA is an average. This current price is an average of the last 10 candles, right? And because of that, because it is an exponential moving average rather than a simple moving average, it gives more weight, more importance to the most recent of the 10 candles, as opposed to giving them all the same amount of importance, right? So that's what an exponential moving average is. So we're going to be using 2 of them. We're going to be using the 10 period exponential moving average, and we're going to be using a 100 period exponential moving average. Moving on to the RSI, we're going to be using a 21 period RSI. So if you're unfamiliar with what an RSI is, it is basically used to tell if the market is overbought or oversold, or if price is overbought or if it's oversold. So generally, the RSI should stay between these two levels, 70 and 30. And as you can see, a majority of the time, price is staying in between these two levels. However, when price peaks above this area, so when price peaks above 70, you can see that here, when price peaks above 70, price begins to retrace a little bit. And that is because price is thought of to be overbought at this area. So there's thought of to be less buying pressure in the market. So price tends to either rest or start to retrace, right? So in this instance, it starts to rest before end up moving higher, but it does move lower, right? It does move lower before it ends up moving higher. So we would call that a rest instead of a complete retracement, but the concept remains. And on the flip side as well, when the RSI is below this 30 level, you can see that this would be thought of as oversold. And again, here, when price is falling, price gets oversold here and then rests a little bit before moving lower. And then it becomes oversold again, gets really choppy, has a sharp move upwards before slowly continuing downwards. This overbought and oversold concept isn't an end-all be-all. It isn't guaranteed in any way for price to turn around. I've seen many times in the market when price is extremely overbought and it still moves strongly in the upward direction, and vice versa. I've seen the same thing where price is extremely oversold and it still continues to move down. However, this is just going to be one of our filters that we're going to be coding into our bot so that we can have more precise entries. So going into a bit of the rules that we're going to be coding our bot around, because we are coding a trading bot instead of just trading ourselves, we have to really break down our strategy into very simple terms that are very, very repeatable, that are very black and white. Because when trading ourselves, we can, without even knowing it, we can put a bit of discretion into our trading, whereas a bot can't do that. A bot can't be discretionary. It needs to be black and white. It has to be very mechanical, and it needs to be, if X is above Y, then do this. If X is equal to Y, then do this. It has to be very black and white. It cannot be, oh, it looks like it is slightly above, so we'll do this, or it looks like it's slightly below, but they might be equal. No, it has to be black or white, right? So what we're going to be doing is the rules of this simple strategy will be that if price, or if the lower period EMA, so if the 10 period EMA crosses below the 100 period EMA, then we will sell, right? Originally, we will put no take profit in and no stop loss. However, we will close the trade when price is oversold in a sell and overbought in a buy, or the 10 period EMA crosses back above the 100 period EMA. So let's go through that again, right? So in simple terms, if the smaller period EMA crosses below the larger period EMA, we sell, right? So go here, right here we would sell. And we would stay in this position until one of two things happens. Price gets oversold, which is price, or the RSI value is less than 30, as you can see. Right here, it is less than 30. So very briefly, it hits less than 30. Or the RSI, the 10 period EMA crosses back above the 100 EMA right here. Whichever happens first. In this instance, the oversold happens before this, so we trade based off of this. We close the trade based off of this instead of closing the trade based off of the cross back to the upside. We can in the future look, when we get into our back testing, we're going to take a look at maybe closing half the trade here and then letting it run and then closing the other half here. Maybe that increases our profit, maybe that decreases our profit. We'll take a look and see how that changes our profits. But for right now, we're just gonna leave it as one or the other. And again, here. So now that price has crossed back above this, we can look to buy. Now that the smaller EMA, the 10 period EMA has crossed above the 100, we will buy. So we are going to buy right here. So it crosses here and the price is up here. We're going to buy, and we're going to continue buying until price is overbought. Which price is overbought right there. And then it doesn't cross back below the 100 period EMA until there. So again, you can actually see in this instance that if we were to close half the trade here and then the other half here, we would have lost a bit. Instead of closing and cashing in all of our profits up here, we would have cashed in about half of our profits, locked in about half of our profits here, and then we would have locked in about the rest of them here at a lower price. In some instances it is better, in some instances it isn't. It just depends on the specific setup. But yes, these are the basic rules of the strategy that we're going to be coding. And yeah, let's get into the actual coding of the bot. What's going on, you guys? Welcome back to the TTC Trading Bot course. And in this one, we're going to be going into a bit of coding. So first things first, you're going to need to download MetaTrader 4. You can get this from your broker. My broker is Awanda. That's what I use personally. And I was able to download it from them, no problem. If you use other brokers, I know many brokers do utilize MetaTrader 4. I think they're one of the most popular trading platforms, if not the most popular trading platforms among brokers. So chances are your broker will allow you to download it from them. If you don't have a broker, I would recommend Awanda. I've used them for years, no real complaints. So you can sign up for them. It's easy, it's free. So go sign up for a demo account or a live account or whatever, and then you can download MetaTrader 4 from them. But once you have it downloaded, you're gonna open it up to a screen like this, and at the top row over here, you're gonna scroll over to a button that looks like either a book or a stack of papers. And when you highlight it, it should say Meta Quotes Language Editor. You're gonna click that. And when it opens, this is the application that we're going to be using to actually code our bot. So you're going to come over here, click New. We're going to be clicking Expert Advisor because that's what they call bots. They call bots Expert Advisors. You can also create indicators, scripts, libraries, include files, classes, Python scripts, or databases, but we're going to be doing an Expert Advisor. So then click Next. Let's name this EMA cross. Just click Next. We don't need any of these functions. Again, click Finish. We don't need any of those functions. And it should come up on the screen like this. Just going to maximize that. And then here we have three functions. We have the onInit function, onDinit function, and the onTick function. So the onInit function is going to run one time when your bot is originally initialized. So when you first start running your bot, this function will run. So this is a place where you would put something like bot is running successfully. So whenever you start your bot, you will go ahead. Whenever you start your bot, there will be an alert, and it will pop up and say that your bot is running successfully. Again, onDinit is the exact opposite of onInit. It will run when your bot is de-initialized. So when your bot stops running. So here you would put bot is no longer running. Yeah. And your onTick function is where we're going to be spending most of our time. Unlike the onInit function and the dinit function, the onTick function runs every single time that there is a price update in the market. Every time that the pair or the symbol that your bot is running on, every time that price updates, which is many times a minute, an hour, many times, this function will run, right? And just as a quick side note, I will not be going into a lot of deep coding concepts, so if that's what you're here for, I apologize. I will not be going into a lot of trading concepts. We just don't have time for all of that. We're trying to make this a quick course just so that you can understand what goes into building your own trading bot and how you might go about doing that. If you are interested in programming or coding in any way, I would definitely recommend looking into it further on your own, because I love coding, I love programming, and I've been doing it for years. So if you are interested in that, definitely look into that on your own time, but we will not be doing that here. So in this onTick function, we are going to have to start defining our values, right? So here I'm going to do a quick comment: define indicators. So we have three indicators that we're going to be using. We have a 10 period EMA, a 100 period EMA, and we have our RSI. Let's start with the RSI because it's very quick and easy. So first, we should go to our MQL4 documentation because it's actually very good, and it basically tells you what you need to know and how to do certain things. Like it'll give you common predefined variables, common functions that you might want to use. It can give you the trade functions that are available, like closing orders, modifying orders, selecting which order, sending orders, things like that. But for what we're going to use right now, we are going to technical indicators, and we are going to find RSI, and it is of type double, and these are the parameters that we need to enter. This is basically how you can use it down here. So we're gonna go back to here, double, which is just a variable type, double RSI value equals RSI, and for the symbol name, I'm just gonna leave it as null because that will automatically be the current symbol that your bot is running on. Same for time frame. I'm going to put 0 because it'll default to the current time frame that the bot is running on. And period, we're going to put 21. So we're going to be using a 21 period RSI. Some people use 14. For this course, we're going to be using 21. Applied price. We want this to be applied to the closing price of every single candle. That way it's uniform, because if we do open for some and open for others, or whatever that might be, it'll be all over the place. We just want to do the closing price so that it's all uniform. And the shift, we want that to be 0 because we want the current price of the RSI. So RSI was actually very simple. It gets more complicated for the EMAs. So we need 2 EMAs. We need our 10 period EMA and our 100 period EMA. However, we are going to need 2 of each because we're going to need to check whether or not there was a cross, right? So I'm going to actually define them first, and then I'll explain why I define them as such afterwards. So EMA 10 previous, EMA 10 previous equals IMA null 0 period 10 mode EMA, because it's an exponential moving average. Applied price, can't spell today, price close, and then the shift of 2. I'll explain that later. Let's copy that. EMA 100 those are the same, and then I'm going to be copying those. One shift of 1. So as you can see, I have 4 EMA definitions here. I have EMA 10 previous, EMA 100 previous, EMA 10 next, and EMA 100 next. As you can see, the only thing different between EMA 10 previous and EMA 10 next is the shift at the end. So I'm going to explain the shift as well as I can right now. So if I open Paint, if you want to think about 2 different, you cannot tell the difference between those 2 lines. I'll do blue, right? So if we want to check if there was a cross, we would need to check that this line was above this line at this point. Let me get yellow. We need to check that at this point that line was above that line, and that at that point that line is above that line. So at this point in the yellow, at this point in time, this specific candle, right? Let's say that there's a candle here and a candle here. At the time that this candle closed, this black EMA was above this blue EMA. And at the time this candle closed, this blue EMA was then above the black EMA. So if those two things are true, then there must have been a cross. This cross must have happened, right? So the way that we check that, the way that we do that programmatically, is we actually have to think of the lines themselves differently, because programmatically these aren't actually lines. These are just a series of dots. They're just a series of, let me make that bigger. The computer sees it as one line, one dot, one dot, one dot, one dot, 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 dot. All right. So the computer sees it like this. So we would need to check that this dot, or these dots are arranged in this fashion, and these dots are arranged in this fashion, where the black dot is greater than the blue dot at this point in time, and the blue dot is above the black dot at this point in time. That means that their lines would have crossed, right? And the way that we do this, again, is with the shift that I mentioned over here. So if I take away those two points, right? Let's say that this is the current candle. This candle is currently being created. This candle was created from before, and then this candle was also created from before, right? So this, not the best drawing, but you guys understand what I'm trying to say. This is the current candle that is currently the current ticks in the market are changing the value of this candle until the candle closes. This candle has not closed yet. This is the current candle. So this would give us a shift of 0. This candle is the current candle, so this has a shift of 0. This candle, because it is the second most recent candle, or I guess it is the most recent candle that is closed, this would be a shift of 1. And this candle would be a shift of 2. That's an ugly 2. It's not much better, but there you go. This would be a shift of 2. So what we have done what we've essentially done is EMA 10 previous is this specific point right here. EMA 100 previous is this specific point right here. EMA 10 next is this point right here, and EMA 100 next is this point right here. So EMA 10 is the black line. So let me 10, that was ugly, 10 period 100 period. So the black line is the 10 period, the blue line is the 100 period. So I hope this is making sense. So in order to check if there was a cross, we would need this point, these points at this shift, and these points at this shift. So how can we actually check that? We are going to use what is called an if statement. If, what did we say? We said if the EMA, if the previous 10 period EMA is greater than the, no, is less than. If the previous 10 period EMA is less than the previous 100 period EMA, and that's how you, the double ampersand is how you use and in, and programmatically in the MQL4 language. So if the 10 period EMA, the previous 10 period EMA is below, actually I'm writing it backwards, so I'll do it is greater. So if the previous 10 period EMA, this line, is greater than the previous 100 period EMA, and the previous 10 period EMA, or the next 10 period EMA is less than the next 100 period EMA. So if this is greater than this and this is less than this, then we know that there was a cross. There was a cross downwards where the 10 period crossed below the 100 period, which means we should likely now be in a short-term downtrend. What we call that? We call that a death cross. And if that did not happen, else if, same thing, but what we're gonna do is we're gonna just flip the signs. Same thing, but, oh, sorry, same thing. We're just gonna flip the signs around. Oh. This is what we refer to as a gold cross. So this gold cross means the 10 period EMA was below the 100 period EMA and crossed above it, and this means that the 10 period EMA was below the 100 period EMA, was above the what this means that the 10 period EMA was above the 100 period EMA and then crossed below it. So this would be a short-term downtrend. Short-term downtrend. Short-term uptrend. There we go. So that's it for this video, just for the definitions of our indicators and a bit of getting into our trading logic. But next we're going to be going into actually executing functions and how we can actually start buying and selling in the market. What's going on, you guys? Welcome back to the TTC Trading Bot course, and in this one we're going to be executing trades. So in the last one we defined our indicators, and hopefully you guys understood why we had to do a previous and a next, just so that we can really define whether or not there was a cross or not, or if the prices are just above or below each other, right? Because there could just be the EMA, the lower period EMA stays on top of the higher period EMA forever, and then we wouldn't want to buy in that instance. We would only want to buy if they've crossed, right? If there was a change in their positions. So now here you can see in this instance this is a death cross, so this is where we would look to sell. So before we actually start typing it out, we should actually go to our documentation again and then see exactly how we would execute a trade. So it is down here, the order send function. So it is an int, it is an integer that it returns, and this is the basic syntax as to how to place a market order. So